morning and hello, I'm Professor Code. This is the Forex Supermodel Racing Review and Forex Review for Friday the 4th of November 2022. We got nothing to review for yesterday really. We had a non-runner unfortunately. It was we had a good go at this number 5 Ideals Villarets, which was at Ludlow in the 314 yesterday, and it was a non-runner. It was pulled quite late. It was we got 14 to 1 on that, and we had some pretty hefty bets on that, and it got backed into just 6 to 1 or less, and that gave us a lot of options on the exchanges, but inevitably they decided to pull the horse, so we didn't get a run from money, so that was annoying. So the account static at where is it, 53.90 units in profit, from a peak of 72ish. So we've come down about so that's 54, come down about 18 units. We haven't really had much of a break recently, so anyway, that's that. Excuse me. Today is a bit of a blank as well. We got no filter 1, which is our structural filter, no ratio, and no alternates. We had a good look at it, and it's pretty awful. So we're going to leave that. So hopefully we'll get in tomorrow on Saturday. So that's the racing done. Forex, foreign currency. So it's been a big week this week. We stayed out of the market yesterday because we thought it was going to chop, and it did. If you looked at the Bank of England rate announcement, timing and all the rest of it, you can see that the pound dollar cable initially spiked about 25 points up and then dropped down and chopped around, and then eventually became a bit weaker. So we're right to do that. Our experience has told us that that when the market is clustered like that, it's not a good idea to be in. So, and the other thing that's interesting is that the last two major rates announcements. So you got the Fed on Wednesday, this Wednesday. You got this dichotomy, or this difference between the initial market reaction and statements from the Fed Powell, where they were originally viewed as dovish, and then in the subsequent meeting and minutes they're getting more hawkish. And you've got the opposite view in the Bank of England, where it was viewed initially as hawkish, hence the spike up in the in cable, and then as they start talking, he started taking more dovish tone. Our Bank of England governor, so I think it's Bailey, Old Bailey. Anyway, so and what does that tell you? Well, it basically tells you that they haven't really got a clue. They're walking between a hard place and an even harder place. They're walking between trying to choke off inflation with higher interest rates, but knowing that the economy is completely stuffed. It's up to its neck in debt and government borrowing. And as they raise rates, they basically tightening the noose on themselves and everyone else, and something will crack, like the stock market, bond market in England, and all the rest of it. So they're stuffed basically, and they've achieved it through printing and general idiocy. But that's their problem, and it's for us to trade. So that's what we're doing. Today it's non-farm payrolls. That's going to put the icing on the cake on the volatility for this week. We're going to stay out of the market again and watch it. So it's a nice little period to give you a breathing. If you are a forex trader, it's a great time to analyse what you're doing, see how the market reacts with the transmissions and all the rest of it. So not wasted time anyway. So anyway, if you're still subscribed, thank you, and generally thanks for watching, and goodbye.